G'day folks, welcome to the weekly general update for the weekend of the 25th and 26th of February. And a pretty interesting week again, generally pretty positive, but we're still looking for this infuriating correction that would be fantastic to get out of the way. Just a quick reminder, general advice only, and licensing information there as well. So just a summary of the action for the week. The S&P gained just 4 points. So it's the price and volume action really looking like it's waning to me. Maybe I'm starting to imagine it a little bit, but it's certainly looking like it is waning. Certainly the volumes are down, and the price action, if you look at the daily ranges, are getting smaller. So it all looks to me like it's very, very close to a top. There's so many contrarian indicators that are screaming a top. It's just ridiculous. So yeah, I think it'll possibly take a little bit more. I mean, a lot of people are expecting this correction, so maybe it'll just drift on for another week or so until people think it's not going to happen, and then it'll come when we least expect it. The transport index in the US continues to point to a top being in place, and again it closed down for the third week in a row and right on its lows of the week. However, the strength that we've seen in the last 2 months really does bode well if we can just get this mild correction out of the way, and the next medium-term upside target is around about 1440. So if we could just get a couple of weeks correction out of the way, then I think we might get a reasonably good advance through to maybe early May, and if that was around the 1440 level, then I would be happy to significantly wind back the long side exposure and start to put in place a few shorts, because the period from May through August is generally pretty weak anyway, and if we've had a very strong run up into that period, then I think that all lines up pretty well. Now the ASX 200 index gained 111 points on the week, so that was a really nice reversal because we've just seen the Australian market just lagging so disgracefully now for probably 2 years. So up 2.6% was a pretty solid week. The absolute standout was unquestionably the energy sector, and it's got a lot of momentum behind it. And the question in my mind is, though, how much are the larger stocks being held back in general terms by this political circus that we've had in recent months? To my mind, the large cap stocks in Australia, the prices are not determined by the local market, they're determined by the buying of overseas investors. And there's two things against buying Australian stocks at the moment. One is political, because the goalposts keep getting shifted. So if you're an overseas investor looking to put big money into this country, then you're going to be less reliably able to do that, because you just don't know what political decisions are going to be taken next week. The second reason is that the strong Australian dollar, of course, is making buying those stocks that much more expensive, so that's not helping either. Now the best performing sector of the market unquestionably is the oil and gas small cap stocks. They're just going brilliantly. The gold stocks have done okay, but look, there's still a massive catch up to come with the gold stocks, so don't lose sight of them in all the flurry over the oil and gas stocks at the moment. Now gold had a solid week. It was up $50, and the consolidation leg that we've been in for a number of weeks now looks to be finished. So for me, look for around 1800, and we'll have a look at the charts in a minute, but look for around 1800, bit of resistance there, and then push on to 1920. Now the two gold miners indices in the States, the GDX index and the GDXJ, which is the juniors, were both higher on the week. They did turn down a little bit on Friday night, but generally for the week they were higher, which is a good positive sign. Silver, 6.5% higher, had a brilliant week, broke out above $35 as I've been pointing at for several weeks, and did so with a fair amount of momentum. So silver looking good, and I'm looking for a run now towards $40. Copper held steady on the week. It's holding close, just under $4 a pound, which is a very, very robust price indeed for copper. And also want to have a look at the shares of Caterpillar, which is a Dow Jones stock. It's a leading indicator for the health of the resource sector, And when you have a look at the share price of Caterpillar, it tells you all that you need to know about the health of the resource sector. So let's hop over and have a look at the charts. This is the S&P. We'll have a look first of all on a weekly chart. So you can see now we're definitely up at a big double top, but you can see that the weeks, the range of the weeks from top to bottom is getting smaller and smaller. And I'm never sure that I trust this volume data in this this particular program, but certainly the volume looks to have fallen off a cliff in recent weeks. Momentum indicators, however, haven't rolled over yet, so we can't really be definitive that we're at the top, but certainly you'd expect resistance here, and all the signs are that this upward momentum really is struggling now. Let's just have a look at the China index. The Shanghai index has done extremely well, and you can see he had basically 5 or 6 strong weeks up in a row now, so China index is looking pretty good. So it doesn't look like they're too concerned over there about an imminent property crash that we seem to be hearing about constantly. Now let's have a look at some of the other indicators in the States. Let's have a look at the banking index in the States on a weekly chart. You can see the momentum indicators. The MACD now is just rolling over in the last week. Looks like it's really had enough to the upside, and you can see that the price is fairly well extended above the moving averages, so I would expect a pullback of maybe 5 to 10% in the banking index. Now the next one to look at is the Dow Jones Transportation Index, and let's look at that first of all weekly, and you can see 3 weeks down in a row, closed pretty close to the lows on Friday. We had much bigger volume in this week just gone. MACD has definitely rolled over. We've now bridged the gap back to the moving averages, but I would be expecting to see at least a small correction, probably bring it back to around about the 86.5 level. So far it's come back about half the distance that I would expect it to. So I think the transport index is probably about halfway played out. Now let's have a look at the shares of Apple that I pointed to last week, because there was what looks like a huge reversal candle which occurred last Wednesday on February 15. Now at this point in time that hasn't followed through. The price has headed back up again, but you can see on decreasing volume. So we've certainly still got some conflicting signals in the US. So that means that you just can't afford to be getting too enthusiastic about short selling anything at the moment, because we really need the US market to roll over. And I'm looking for, let's just go back to the US index. I'm really looking for a close below 1340. Be clearer on a daily chart. So I'm really looking for a close below the low of February 16. So down below 1340 I think would signal the start of this long overdue correction, and we're looking for, in terms of targets, 1320 is a possibility if it was a very mild correction, but I'm really looking 1289, so let's call it 1290. So 1320 and 1290 are the two target areas on the S&P. Now I mentioned Caterpillar. Let's have a look at Caterpillar on a weekly chart. You can see this has been an extraordinarily strong trend from 2009. It's come from about $25. It's now at $115. It's at a huge double top. The MACD just starting to roll over now. We're just starting to lose momentum. Hasn't rolled over yet, but you can see the last two little bars here are quite low, indicating that these two MACD lines are converging, and therefore it's definitely losing upward momentum. We've got the weekly RSI very close to being oversold, so really everything's in place. But unquestionably there's been terrific strength in Caterpillar, and I think that's really the sign that we need for the overall market. Now let's have a look at gold, and we'll look at gold on a weekly chart. You can see we had a good 4-week run up. We consolidated sideways for 3 weeks, and then we started to move higher last week. So I think the consolidation phase now is over. So we've had, for those that like to consider Elliott Wave, I'm not a complete devotee, but I think that does carry some weight in terms of crowd behaviour. So we've had a minor leg up, then we've had basically almost a sideways leg rather than a bit of a retracement, which indicates real strength, and now we're heading off into what is generally the stronger leg. Now let's have a look at silver. Silver on a weekly chart. First of all, we'll put it up on a weekly. So you can see here, same pattern, 4 strong weeks up, 3 weeks consolidation sideways, and now we're breaking higher, and we've now broken above these highs of October and November of last year. So I think we should see a good run in silver now towards $40. Next is the Aussie index, and it's really has been struggling, although last week wasn't bad, as you can see. Still really caught in this wedge pattern, and this index bears no resemblance whatsoever to the US index at all, which has been in a very strong uptrend since October. We had a bit of a blip up, but since then it's gone sideways. Let's have a look at what the star of the show was last week. Energy. Unquestionably, energy was the strongest sector by a long way. Let's have a look at finance. You can see it closed up a little bit, but not much. Materials similarly closed up on the previous week, but not a great deal in it. And then finally we've got the small ordinaries index. And again, let me just put this on a weekly. Now you can see the small ordinaries did extremely well also. Now let's just have a look at the other key drivers of stock markets, and that's currencies. This is the US dollar index against a basket of currencies, which is roughly about half that is made up of the euro. And you can see we had 2 sharp weeks down in the dollar. We then had 3 weeks sideways, and now we're heading down again. And it finished right on its lows for the week with 2 fairly reasonable down days. If we have a look at the euro against the US dollar, you can see obviously the inverse is applying, and the euro getting stronger. So whenever the US dollar is heading down, that is going to be positive for commodities, and it's generally positive for stock markets. So I think we're still in this situation where we've got really good upward momentum. We just need to get a little bit of the excess out of the market, and then we can jump in a little bit more solidly. Let's just have a look at the gold miners indexes. So let's look on a weekly chart. Not really clicking into gear yet on a weekly chart. We've had a bit of a move up since December, but nothing really quite dramatic. And similarly on the juniors, certainly trending higher in the short term, but really nothing emphatic about it. But small cap gold stocks will play catch up big time, and that'll be one of the big money making opportunities of the next 6 or 12 months. So that's it for this week. Talk to you next weekend. Cheers.
If you want to trade and invest with us with a big edge on the market, go to our website, specialistshareeducation.com.au. You can access our free video series on creating trading cash flow and smart investing. Plus, you may also register for our weekly Ask the Expert webinar.